big week for crypto as well as the stock markets. We have a whole lot that we need to discuss today because we have PPI and CPI inflation data, which is going to be coming out, and it's sure to bring volatility and affect the markets. If we start off over here with the banter bubbles charts, well, on the daily, you can see most of the coins are down, definitely putting in a bit of a pullback. I'm going to give you the support levels that are underneath current price action, as well as show you the overhead levels that Bitcoin bulls need to clear to salvage yet another week. We'll talk about how this week was saved, and bulls are still trading on thin ice but hanging in there. So stay tuned till the end of the show. Smash the like button, hit the bell notification, and subscribe to the channel, and help me out because we did change the time slot slightly earlier. So please smash the like button so that the guys can know that we are live on today's show. And yeah, looking at the hourly, you can see also a lot of the coins still pulling back over there. Only a few of them bouncing. Weekly gains still up, so holding that over there. Monthly still down, and this is the week ahead, right? If you put on your Forex Factory on the high impact data events coming up, we have Tuesday and Wednesday stacked with information, looking at the core PPI, US PPI month on month, core CPI month on month, and year on year data coming out. And that's of course sure to affect and drive what the Fed will do next. But the Fed have already said, if you have a look at this from the 31st of July, and I'll just zoom through till the end, they say over here in the bottom over here, monetary policy will adjust. It will adjust. So it looks more than likely that we will get an interest rate cut. Currently, it's pricing it in at 53.5% for a 50 basis point cut, and over here 46.5% that it's going to be more than that. So a lot to look at. How will this affect the stock markets? Well, if you look at the October market low occurrence by month and what happens within the markets, you can see from the S&P 500, it looks most likely that August may have been a major turning point for at least the S&P 500. So if you look at the tweet from Seth over here, he says, did the market already bottom in August? Lots of data suggests that it has, although not the technicals just yet. Although I am a technical analyst, and I would say that the data looks compelling that on the daily candle, the S&P 500 has put in a bottom. I'll show you why. He says technicals are lagging. Most market troughs occur in August, especially during the election years, and that's from Fundstrat, which we know they have a great track record. So looking at that high probability, the orange denotes the election years. 46% of the bottoms have occurred in August in the election year, which is pretty significant over there. And this is also information over here that you can have a look at, which shows the new peak in new highs. And simply, if you just read this, basically what it suggests over here is that when you have new weekly highs that have peaked, the median is 44 weeks later before you get the cyclical peak. So what that means is when you have the majority of the stocks running into new all-time highs, we had 604 of those from the New York Stock Exchange creating new all-time highs. Then it takes 44 weeks later before you go and set in a cycle top. So simply put, what that means is you have just under a year. The expectation would be that the stock market most likely on average puts in its cycle high. And if you measure that out, you can have a look over here. This is part of the reason why we went long on the S&P 500, of course, coming in towards support, looking like a major weekly candle reversal taking place over here. And you can actually measure out 44 weeks. So if you take from that price point over there, where most of the stocks were going on to make new all-time highs in the New York Stock Exchange, and you measure 44 weeks forward, and then you can take a vertical line and you can actually pinpoint that, that would put it somewhere around June 2025 is where you're looking for the major peak in the stock market. So where will this come into play? Most likely somewhere in that 6,000 point region for the S&P 500. NASDAQ also holding up over here. High highs, high lows, pretty much basing back into the horizontal support. Previous resistance now flipped into support. Could have come a little bit lower, maybe down to 430. That is possible. And then you have, of course, Coinbase, which has deviated the range low, breaking back inside the range, holding also its 200-day moving average, and we're looking for prices to move higher. And you can actually line that up to see how does this correlate actually with the crypto markets, right? So if we measure from current price action, does it line up with our timing target that we've measured out over here, which we based out of the halving cycles. So we measure out following the halving cycle, looking at somewhere between 12 and 17 weeks or months, 12 and 17 months later. Well, what happens if we measure from current weekly candle over here and we go 44 weeks towards that date? Well, where would that line up? You can see pretty much June takes you exactly into the zone, which is what we've been looking at as a key area where you could see a major cycle top for the crypto market. So pretty much all dips are for buying, and it creates a major opportunity for the long term, especially when you see the stock market, which is still sitting in extreme fear. And that's part of the reason why I took this long trade over here, of course, attempting to buy this wick low, which you see on the S&P 500. We took the trade over there. There's my entry, which came in on Prime XBT, trading the S&P 500. And since it's a big economic week, I recommend if any of you do want to participate in these trades, there is a link in the description below. I'm trading the MACD cross over here, looking at this to turn towards the upside and the S&P 500 to push higher. So if you do want to trade that, the link's below to Prime XBT. There it is. You can claim up to a $7,000 sign-up bonus. It's a 20% deposit bonus, very limited offer on top of whatever you deposit, but limited to 7,000, right? Or you can choose the 25% on trading commissions. Remember, on Prime, you will be able to trade not only crypto futures, but you can also trade stocks, commodities, and forex pairs. Everything is listed over here. Here you got the forex pairs. So if you want to continue to trade the yen trade, JPY USD, that is there as well as a possibility. Now, going into the election year, we've showcased how most of the time you're looking at August to form a major bottom and prices to rally up. Now, this is a little bit of a hedge trade that a lot of people, I believe, are taking, which is why if you go into poly markets, which is the betting side, you see a skew over here with Harris at 52%, Trump at 45%. So Harris, so far in terms of the votes, taking the majority over there and pulling ahead in the rankings above Donald Trump, which means they're obviously betting that he could be losing the elections. But what I would say over here is there's a lot of crypto people that utilize this site. And I don't really want to get into the whole politics. The only reason that I'm mentioning this is because Trump labeled himself the crypto president. And if Trump were to lose, that would probably be bad for crypto, right? That's at least what many people subscribe to, the people that are voting here. I don't subscribe to that. I believe that the cycles will persist no matter what. And whether he wins or loses, it doesn't matter if they put an orange man or a purple man in. Crypto and stocks will continue to rally to all-time highs as per the timing cycles that I've outlined. But for those who are fearful, what some of them are doing is they're coming here to this side, and as a hedge, they essentially longing Harris, right? So if you place your bet on Harris and she wins, well, your crypto portfolio goes down, but you claim victory on the fact that you bet that Harris would win, and then you win that bet, right? So just keep that in back of your mind when you see this doing the rounds on Twitter. It's unlikely to affect the crypto markets. I believe the crypto markets will continue to rise towards the upside, but nevertheless, it's something interesting to look at. So we still have the hammer that hit down over here, and we look for the breakdown on the DXY, which is still intact. If I zoom in a little bit closer, you can see these rejection candles which are coming in towards the high over here. Of course, we can tighten this up a little bit if we wanted to have a look at it like that. There you go, just put the pink box over. You can see, view that close enough as a rejection to the white line, and we're looking for the breakdown on the DXY. This simply means that the dollar will be underperforming against a basket of other currencies, and usually that signals your risk on environment. And if you can break and gain multiple days of acceptance below the gray box over here, you're losing a highly significant area, which happens to be the mid-range of a rising parallel channel that's been a multi-decade channel. Actually, you can see over here, up, down, holding this channel. You're losing the mid-range, the dotted area, and you're also losing, of course, this gray box region. So we are looking for the hammer to continue on over here and break this down. That leads to those crypto rallies. Now, as per timing, well, you can see if you follow the trajectory and it were to take time, you can just imagine if it chops around here a little bit before actually getting a breakdown. Well, before it reaches the bottom over here, that could happen somewhere. If you look at my timing over here, somewhere around June, July, of 2025, which is all in alignment with what we've just seen in terms of the timing, with the stock market being 44 weeks later on average to set in a cycle peak, as well as crypto being between 12 and 17 months from current date, or at least from the halving cycle. So that would put it around 12 months later before you expect a major crypto cycle top. But the whole world is in fear. We have the death cross, right? The looming death cross, which is now already taken place. That's the cross between the 50 simple moving average crossing below the 200 simple moving average. And currently that has occurred, right? The death cross has occurred. Price rallied into it, rejected, and started to come down. So now you're going to be looking for higher lows in the making, right? Now, if you want more information on this, simply go back to my video that I did on Saturday. The Saturday stream is essentially where I covered all of this. If you go through, I'm sure it's somewhere over here, this one over here, urgent, the most feared signal in crypto. Go and watch that. I go extensively into the death cross and the validity of it following the halving cycle. And basically, I don't want to give too much away. Please go watch the video. But essentially, I said expect more chop within this region as opposed to a cataclysmic breakdown of price. So we will be keeping an eye out on that. This is the history of all the previous bull crosses and death crosses that we've seen, or golden crosses and death crosses. Now, we just recently had a massive liquidation event a couple of days ago. That was on the 5th of August. We saw $1 billion worth of liquidity wiped out of the market. And usually what happens following this is a new trading range gets formed and a base is found, and then the bulls and bears will go at it again, and one of them will take the trend in motion. So we're obviously looking for the bulls based on the timing cycle within the next month or so to start to break out towards new all-time highs. That's purely based on the timing cycles that we've looked at, this correction being 4.9 months, so just short of 5 months. I believe we're 154 days into this correction from all-time high to current levels, and we consider that corrective phase within this cycle, at least this corrective phase within the bull run, being the 5th correction, to end within 4 to 6 months. We're pushing 5 months. We've got about 4 weeks left before we really start to reach those extremes, and we are looking for high prices. What we saw in that leverage flush as well is that the estimated leverage ratio came down pretty significantly, and it recently just dropped another 1.5% over here. That is the pink line coming down into that 11% zone. But if you look at this, you can see there is a bit of a range that's formed. If you look at that, the leverage ratio ranging between those two levels, pushing back down towards the bottom of that range. And the last time that we saw it at those levels was at $43,000, before we had one more flash down a little bit lower towards 40,000, and then price obviously rallied all the way up to $70,000, where we had a pretty rapid move. So we are looking at that. We're keeping an eye out on the leverage in the Whale Room Discord community, just updating you all over there. A couple of the deltas are positive right now, meaning more longs than shorts, and a couple of them are negative. The negative ones over here, meaning there's more shorts than longs, is Solana, Pepe, and we have Bonk. And then the ones that are positive over here that we're eyeing out, slightly positive skew, not majorly, is Bitcoin, Ethereum, and WIF on the bottom over there. So for any of you that want updates on all of this information, remember we do drop it in the Whale Room Discord. But as mentioned over here, following a major liquidation event, following the reset in the leverage ratio, you can also see, if you go to the daily exchange volume, it's recently got a marked uptick. Now, for sustainable moves within these bull runs, you need to see this trending pretty aggressively towards the upside. We've had our first major marked uptick, showing new exchange volume is coming in, right? New liquidity is coming into the market, and this will trickle slowly, and then eventually it will start to rapidly expand. Could this be the start of the first major expansion? Well, so far it looks like it may be. Now, in terms of the flows of money in the total market cap, total 1, 2, 3, and others, this simply just splits it up into the whole market cap. How does it look currently? Well, on the weekly time frame, you can see the total market cap has come flush back into major support on the Gaussian channel, almost hitting the midline over here, but closing above. Could you trickle down a little bit further towards 1.85 trillion to test with a body candle close into the top side of the Gaussian channel? Definitely that's possible. symbol. This is a trend trading tool, so it will show you are the trends still up or down. If you go into Total 2, which is using all the cryptos minus Bitcoin, so it excludes Bitcoin, which is of course the biggest market cap coin. Well, this one's closed inside the Gaussian channel, but still held the middle of that as support. Now you're looking to immediately reclaim and start to close back above 890 billion. That will show that new money is coming into the market and it's still a trend in motion. As for Total 3 as well, same thing. This is all the cryptos minus Bitcoin minus Ethereum, and that one also came into the middle, and you're looking to start to close back outside of this about 555 billion. Others, here's your true degen market cap. Well, you can see the flow of risk, right? You can see the differences between these Gaussian channels. Bitcoin holding up the majority over here, which is why Bitcoin continues to outperform. When you look at this one and you minus Bitcoin and ETH, this one's slightly lower, and this one's even lower. And then others, which is the true degen, is even weaker. So in the pumps, this is your far right of the risk curve. These ones tend to go up a whole lot more, but when it's risk off, they go down a whole lot more. So keep that in mind when you go about your trading and looking for opportunities. Now, the hope is still alive based on the weekly close that we had from the bulls. Personally, I would have loved to see a weekly close above $60,000. That would clear some major resistance levels, but the close over here was still good enough to keep the hope alive at 58,735 for the potential for that inverse head and shoulders formation to play out. So we're expecting continued chop throughout this week, especially going into the high impact economic data. But if it turns out to be favorable for risk on assets, then you should start to see weekly closes now above $60,000, $62,000 by the end of this week. And that will be your additional indicator alongside having a look over here, at least at this chart over here, with the daily exchange volumes moving towards the upside. That will be your indication that you are still on track to break out and clear the neckline of this inverse head and shoulders, especially coming off of low volatility, right? So we'll keep an eye out on that. And in terms of the consolidation that we've seen right now, as per Matthew Hyland's tweet over here and looking at his charts, it's all in line, right? We're coming off periods of low volatility, which you can see down here. We spoke about the 44 weeks from now to all-time highs on the stock market, as well as around another 12 months or so for the crypto cycle to continue before putting in a peak. And then if you go into this is additional data which you can utilize, which shows the consolidative period that we've had in the election years. And that was 2012, 2016, and 2020. And so far, the chart looks very, very similar at current levels. So that is a lot to look at, a lot to consider over here. You don't want to be caught on the wrong side of the trade. This is usually the phase where people get shaken out. And you're seeing it in the markets, right? The crypto fear and greed still in that fearful zone, sitting at 25. We had a full reset. When you overlay it on a chart, this is what it looks like. Coming back down to those lower levels, which every time we've seen major lows formed as per the circles, this correlates the Bitcoin chart on the top. So when the fear and greed comes into these low levels, big bounce, right? Fear and greed comes into these low levels. And each of these were different events, right? You had the FTX collapse, obviously bringing the fear and greed extremely low. This one over here was when USDC depegged. I think this one over here was some sort of geopolitical tension or war that came about. And then we have the most recent ones, right? Just a big flush over here. And then we had the yen trade unwinding, right? So the Japan raising the interest rates, creating a whole lot of fear. And all that's done is created the descending broadening wedge, which is still a bullish formation, right? So we'll continue to monitor this. At the moment, you're looking for high lows. I'm going to go over the levels that must be cleared, right? As a starter, risk is still towards the downside for now. But if bulls can start to break above these levels, above 63,366 on the weekly, well, you'll be reclaiming, of course, that 21 exponential moving average, which currently is governing price towards the downside, as well as the strong horizontals, which were prior weekly closes, opens, and wicks that are pretty significant at the white zone over here. We need to get back above that. I do believe that this will probably hold as a low, but I don't rule out the possibility of coming back to fill some of the inefficiency in this wick. Remember, markets like efficiency. So when you see big fast moves up or down, so for example, this was a big fast move down. What happened over here? The market pushed back up halfway through that candle to fill some of that inefficiency. Then we went, obviously, we have this massive wick over here also creating an inefficiency. So don't be surprised if prices do come lower. It's more the high time frame I'm talking about. Real safety comes back in when you start to break above this, and don't rule out the significance of $69,000. When you eventually flip the $69,000 into major support, this is where you see the pretty explosive moves towards the upside, which is pretty much what's shown over here in those previous election years. The consolidation, once you eventually flip that level into support, is where you see explosive moves towards the upside, and that level would be viewed as this, right? So it looks something like this. If you get back above, start to flip this, and you defend 69,000 as support, this thing will be a very, very, very explosive. The longer the consolidation here, the bigger the eventual breakout when it does actually take place on Bitcoin, right? So for now, you're looking for chop within this region. You can see as the longer that bulls can hold price sideways for, the better, right? So the more they can chop things around over here, the better. Currently still looking to form that right shoulder. Have turned price off over here, just to give you an indication of the moving averages that I'm using, which is the 3, the 9, and the 30. These are chopping about, right? You don't want to break below the trading range. If you do start to break below the trading range, these moving averages will start to gain major momentum towards the downside, and that's where you start to see price dropping aggressively, right? So we still do see at $61,300, there is a lot of liquidity over there. If you can gun up for that liquidity, market makers are looking for liquidity. If they can spike price up towards there and hold it there, well, that means you'll start to reclaim some of these key levels that are outlined over here, and then you're looking for new moves towards the upside. For those of you who want to learn more about this, right, remember, we're starting very, very soon. 9 days, 5 hours to go. You have 9 days to sign up to Whale School. Use the exact link in the description below, right? Do not Google it, because there is a lot of scam sites out there. So please go through to this link. That is going to take you to the correct place. Click that link, sign up. I think that we only have about 7% of the available spots still available for this cohort. So use the link below and make sure you join us. Now, getting us above that $61,000 region will also start to regain some of these key moving averages. You can see over here, of course, we are below the 200 EMA and the 200 MA. Now, this is why I said I haven't ruled out the possibility of coming back down to these low levels. You can see price is still ranging, right? It's still range bound, with that being the range highs, and then we're treating this as the range lows. That was based off the order block that led to the initial upside move. And if we do come back there one more time, I think that's going to be a wonderful opportunity. Keep an eye out on the fear and greed as fear starts to rise. If prices do come back down here, that's an area where I'm looking to allocate a little bit more. You can see also, if you do wick through and you happen to take out that wick low, keep in mind that you do have a long-term trend line over here since the FTX lows, meeting up over here with that consolidation that occurred at 25K when there was a lot of fear in the market. People were still calling for a breakdown to $10,000 even at that point, and you'd be meeting up with that trend line yet again, right? But personally, this would be a pretty bearish case. I really don't want to see price come this low. I would prefer to see price go into a shallow dip this week, possibly down to $52,000. I'll show you why in a moment, and then immediately spring up and reclaim the end of the week above 62. That will start to look really good. So you are currently rejecting from your CME gap. There it is. It's been filled though officially. Again, significance. That's why that level needs to be flipped, right? Bulls are looking to defend that level. We're currently in the fair value gap, but I don't give this fair value gap a high chance of bouncing price, especially with the momentum that's overhead in the form of all those moving averages. I think this is a low probability outlook. Higher probability would be that you come a little bit lower, right? Now, how low could you go? As mentioned, I'm looking at the wicks over here, both on the weekly as well as the daily. It depends which one you look at. They're going to be slightly different, ever so slightly different, but this one would line up at 51,400. That would take some of that inefficiency, and I think that you'll see demand come back into the market should price go there. If you look on the 4-hour time frame, and the daily time frame, you can see, of course, this is the order block, right? So that's 51,500. And if you move over here onto the 4-hour time frame now, you can see how that lines up as a key range low, right? So this has been the 4-hour range that we've been stuck in. There you go. Order block leads to the breakout, pushes up. We've rejected from the high volume node. We spoke about this last week, why this is an important zone to get above. The first attempt has failed. And now you have, again, also high volume support that's coming in at about 57,400. So keep an eye out on that area. There it is on the left-hand side, running it across. Price is approaching that zone right now. So looking for higher lows to form over here, you definitely have your first one over here. So 1, 2, and maybe if that volume node holds, you'll bounce over there. Otherwise, you're looking for something like this, right? So I know there's a couple of different scenarios over here, which is frustrating, but following big moves when there's a lot of chop in the market, there is always going to be a couple of different options. And your job as a trader is to decide how to hedge and how to react at each of those zones. In terms of hedging, we did speak about this pretty at length last week, where we said, well, this zone over here, if you are looking to hedge with a short, is going to be the absolute perfect zone, because if you were to be rejecting, that would be the zone to reject from. And why did we say that? Well, if you run your Fibonacci tool from the top to the bottom over here, and let's just set it onto a normal chart over here. Let's look at the golden pocket. Well, you can see you are coming exactly into that golden pocket, right? There it is. So I'll highlight that area. We said you're coming directly into the golden pocket, which is between there and there. There you go, running it sideways. You can see the levels 62,000 to $62,669, and the wick went a little bit higher. It went to 62,762. So that would have been the hedge short opportunity. I would be covering those shorts on a move down into the yellow box there, looking to instead flip long. So that's the Bitcoin analysis over there. As for Ethereum, still lackluster, still weak. You can see not a strong weekly candle close like Bitcoin had. Bitcoin candle still turning green, while Ethereum closed as a red candle over there. And it does have a lot of work to do. But when you look at some of the other charts like Sol ETH, well, we have hit a pretty significant zone, right? We spoke about over here, don't chase price. I'd rather wait for a pullback into the zone. And if in fact ETH is going to underperform Solana and Solana is going to outperform ETH, well, this is the zone where you expect that Solana will start to catch a bid, which is literally exactly where we're at right now. I'd be looking for something like this, start to hold this, reclaim within the next couple of days, and then start to expand towards the upside. Now, Solana probably outperforms when the market is risk on and increasing towards the upside. If the market is tanking towards the downside, well, then I expect that to start to occur when the Sol ETH chart, starts to lose 0.05389, which is going to be breaking below Tuesday's candle low, right? Tuesday's candle low on the Sol ETH chart. If you go to Sol BTC, well, also rejecting over there from the range highs, but I still think that this chart is just going to be a lot of chop, right? So I'd be looking for something like this, maybe come a little bit lower and then take another attempt. This will take time to break out above the range high. And remember, that just simply means that Solana is moving up quicker than the rest of the coins and outperforming them if it does continue towards the upside. Now, you're seeing a lot of talk recently about Sui. So you have Suzu over here. He said he closed his ETH position at 2,550, closed AVAX at $20.50, and now he's long Sui at 0.935. So he's already down on the position 0.935. We're at 0.89. I'm not sure why he would have taken that trade, because we only just broke market structure and we have an absolutely enormous inefficiency candle over here, which simply means you have a fair value gap, right? You can mark out this fair value gap wick to wick over there. We'll change the color just to create a little bit of difference over there. There you go. This is your fair value gap. At some point before breaking out, I believe you'll probably revisit into this fair value gap. And that's where you'll see a little bit of support, right? You'll look at for something like this. Let's just clean that up a bit. You'll look for something like this on Sui. So Suzu, you should have done this. There we go. Maybe he watches the show. I don't know. He's a great trader. Look, he's up millions of dollars. So maybe he has a tight end validation below that wick over there. But I'd be looking for something like that on SUI, reclaim above $1 over here, hold that level, and then continue towards the upside. That's what I'd be looking at over there. And then you have other guys as well, like Andrew Kang, right? There's this narrative shift coming into SUI, right? No knowledge of anything actually happening, but a combination of the below is leading me to bet that there's some interesting developments upcoming for SUI, right? What are some of the things? Well, the tweet thread below, roll pull, shill thread, while he sits on an advisory board, large OTC bids occurring on SUI, relatively strong holdership through big unlocks, aggressive price action with no pullbacks, big recent performance upgrade with the 𝗦𝗔𝗠𝗘 potentially allowing for interesting new apps to be built on SUI. So those are some of the things to look at with regards to SUI. That's the level I'd watch for. I think that you could probably pick SUI up around 75 cents. Honestly, if you do start to get a pullback over here, I'm already long SUI from range lows. So this is a longer term position that we established already months ago. So I'm going to continue to hold. It is what it is. But if we do start to break below this expansive candle, my invalidation and closing out hard stop on this position would be 60 cents. If we come back there, I'm out, right? But you have had a market structure break, over here. There you go. Created for the first time, high highs. Now you're looking for the high lows, right? That's why I wouldn't be longing over here. I'd wait for a little bit further of a pullback, long the next high low. If Bitcoin pulls back, that's going to be the zone where you get into the position, right? Okay, let me just quickly see something over here. Timing, we're all good for time, I think. So we can definitely take some altcoin requests. If you have any requests, please drop them in the comment section. I am keeping an eye out on that, and we'll start to go through some of those. And then while we wait for the request to come through, please also remember, guys, Whale School, join while you still can. Only a couple of spots that are still available. The link is below. You can pause the video right now, go through, sign up over there. And then also, if you do want to trade on Prime XBT, the link is over there for crypto stocks, commodities, and Forex pairs. Everything is over here. You got Whale Room as well. If you want to jump into Whale Room, we have 5 alpha pack traders over there, which will help you on your journey. Okay. First one that I saw over there that I want to have a look at is Casper, because if the market's pulling back and Casper's coming down a bit, I think I want to buy more. I definitely think I want to buy more. So I'm keeping an eye out on this. I haven't reviewed this until right now. Still the same plan, right? If I see something like this, a move down into, anywhere between 14 and up to about 15 cents, I'm interested. 14 to 15 cents. I'll be looking for an opportunity to maybe add some more stablecoins to my long-term Casper position. Sol, we already giga long on. I don't know if I'd be irresponsibly long if I added another cent to Solana. So I'm probably just going to hold what I have. In terms of Solana, though, you're looking at holding up over here at the 50% level, 136. And most importantly, you want to reclaim above this 164, which is exactly where you rejected at the mid-range level, right? Pink box, mid-range level, that's your rejection zone. You need to get back above there. Okay, let's see. We can have a look at 𝗕𝗚𝗓. How's 𝗕𝗚𝗓 doing? So if the market is going to form a high low, this week is probably one of your best opportunities to build your longer term positions. We'll look at some of the altcoins. I mean, this one's starting to downtrend pretty aggressively. This one could easily come back down to 16. That is for 𝗕𝗚𝗓, 16.50. Okay. Let's see. Usually when people ask for 𝗕𝗚𝗓, they ask for Rune. Let's quickly see Rune. It did hit our level. Has it bounced out of there, though? That is the question. Okay, still holding up over there. The level was 297. We waited for months for that to get swept. We've swept that level. Theoretically, you could come a little bit lower into there, but you really want to see demand build up over here on Rune and for prices to go higher. Going on to TON. Okay, TON pulling back, had a huge move over there. Did you get a market structure break? No, you didn't. So still bearish market structure over here on TON. But if you can start to form a high low somewhere within this region, then same as Bitcoin, right? Hit the fair value gap, start to push up. That might be your first high low and shift in momentum. Injective, yeah, we can have a look at Injective. Okay, Injective, super bearish to me personally. We're looking for something like that as a potential to hold, but now I'm viewing this key level of previous support now flipping into resistance. So I would not be going long on Injective just yet. I would honestly patiently just wait. Let's just see if there's a little bit of a trend line that's forming over here. Okay, nothing there really, nothing there. Injective, next levels of interest. Well, this level must hold the wick low. This is your order block over here. You want to see that level hold. If you do start to lose that, you're coming all the way back down to the breakout level, right? This was your previous breakout level from the ascending triangle. That would bring it down to $10 on Injective. All right, let's see NEA. How's NEA doing? Okay, same thing. Also, sloppy price action, not looking too good. 350 as major support. Okay, 350 as major support. Let's go to Maker. All right, MakerDAO. All right, also at the key level, you want this zone to hold. This is where you want support to be found. Failure to hold this, if this does start to expand down, well, it could come down to 1248, 1,248. All right, we'll go to the meme coins in a bit. I see you guys dropping meme coins. We'll get there in a bit. Let's have a look at Pyth quickly as well. Pyth Oracle solution for Solana. Okay, let's see. Pyth, how's Pyth doing? All right. Okay. Also, not looking good. Not looking good. Very weak charts. I have to be honest with you. Just getting marked down, right? Go look at if there's unlocks. I don't know if there's major unlocks on this, but pretty much just failing these levels the whole time. You need to see it get above 31 cents. Okay. Link. We can go look at Link. Okay, Link also looking for demand to come in over here. I think you can easily revisit back down to $8.90, and that's an area of interest. That's where you want to see support found. If it fails to hold that area, it's coming down to 714. You'll notice a lot of these coins look really bad, guys. This is why it's so important to be concentrated in your selection, right? Have a look that the coins are doing well against the strongest coins. The strongest coins have been Solana, right? Solana has been the strongest coin so far this cycle in terms of risk to reward and absolute returns that you're getting. Solana has been the best. So if it's not outperforming Solana, it's a tough call, right? It's tough to take that trade. All right, Ghana. Let's go to Ghana. I'm assuming the gaming sector has also been rinsed, but let's go have a look. Okay, Ghana. Here we have it. Okay, absolutely smacked back down to range lows. You know, this is not a chart that you really want to be buying because even if you buy the exact low, like I've said before, it's your opportunity cost, right? How long is it going to take to make your money back? Because if this does even move and oscillate between these two levels and you get 300%, there's other coins that are in a strong trend that you could probably be taking instead. So this is starting to look like it's going to mark down even further to new lows on Gala. Okay, the sad reality. Let's go to render. I'm going to go to the old render chart because I think that it's still trading and it has more history. So let's quickly go to render. There it is. Okay, this is the old render chart. I'm wondering, let's just quickly double check over here that it's still trading render at the same price. Okay. 10, yeah, it's rebranded. Cool, we got it. But what's the price? Is 448. Okay, so maybe, I mean, 453. Wait, what's the date on this? Is it still trading on this one? 12th of August. It is still trading. So this one still works. Yeah, look, I think you can easily revisit back down here. 340. 340. I think it's possible that you'll come back down here. Watch anywhere into that wick, 378, somewhere around there for render. Okay, let's go into some of the other coins over here. All right, what have we got? Okay, the resistance cat, we had the big push up, 175% move towards the upside, a little bit of profit taking, watch for the high low to form, and then continuation high. Let's quickly just run a fib over there. I just want to see something. So in terms of the fib, your 50% level is exactly where the wick went. That's 28 cents on resistance cat. I would look for 28 cents to hold. That's your 50% level. Form the high low there and then continue up. Okay, Mu. That's probably on this chart over here. Let's quickly go. Right, let's do this. Okay, 𝗦. Let's look at 𝗦. Okay, also very choppy. These types of charts, I'm only really willing to take the trades at the extremities because you don't have much edge, right? They have a lot of volatility. So I would be waiting for the bottom of the range, 0.0030. That's the level for me. Otherwise, this is kind of just floating around at mid-range. Okay, let's go mini. Let's see, mini. Here it is. I think it's this one. Mini on Sol. Let me just see if I have it on this chart as well. I might. Mini USDT. Okay, I don't have it drawn up there. So let's just use this one. Most price history. Okay, similar to the last chart, you know, you don't have much edge. So just take it at the range low. That's it. Range low is coming down here, 0.0023. I would honestly just wait for that. Wait for that to get swept. All right, 𝗕𝗬𝗕𝗥. Okay, here's 𝗕𝗢𝗕 coin. Okay, at the 50% level. So you really want this zone to hold. That's your mid-range, right? Mid-range, last couple of digits, 7394, 7394. Okay. We can look at 𝗕𝗬𝗕𝗓. Okay, 𝗕𝗬𝗕𝗓, but if ETH does bad, this is never going to do well, right? Until ETH does well. This is also downtrending, losing a key level, losing the range low. Over here, you had a big inefficiency candle, call it a fair value gap, whatever it is you want to call it. Easy, you can come down to 0.003689. All right, let's look at BlackRock. Okay, how's it doing? Larry Pink, BlackRock. Okay, losing the key level over here. This is a zone that you wanted to hold, right? So you've lost that level. You have to look down to the next major zones. I would probably give it a little bit of a chance of bouncing or holding. This is the next level over here. Last digits 2722. Okay, Vivek, when alt season? My answer would be somewhere towards, let's go into this chart over here. When alt season? This is when alt season. Where is our, here, this chart over here, when alt season. So if this is our timing target, okay, let's just quickly use a ruler. We'll take it from the middle, from July. When alt season is going to be in weeks, that would be 26, right? 26, probably somewhere here, 26 weeks before the end. Last 6 months of the bull run, alt season, January 2025. Most likely that's when alts go absolutely crazy, towards the end of the year. All of this is covered, by the way, in Whale School. By the way, if you want, when alt season, it's all in Whale School, talking about the market cycles of when things expand, when things contract, when there's a markup phase. Have a look, use the link in the description below if you do want to join. Remember, we only have about 7% of the spots that are still available. And that's it from me, folks. I'll see you all on the next one. I hope you all have a great day, and cheers for now.